With all the time we've spent talking about the banks and Paulson's rescue plan and how I think we could get a recession, if not a depression, if it fails, because corporate credit will freeze up, I don't want to ignore what's going on in the real economy right now. The one where people make things, move them around, send them overseas, sell them, unlike the financials where money is created out of thin air. So how is the real economy doing? I always look to the transports. My favorite transport, CSX. My favorite railroad stock, headed by my favorite railroad man, Michael Ward. I think that his company is a great thermometer for the real U.S. economy because it ships a bunch of things all over the country. So we're going to ask him about that. Even as the stock has been targeted by hedge funds gone wild that wanted to depose the best CEO in the railroad business. But that's in the past. Hedge funds are responsible. I mean, I'm not a conspiratorialist, but remember, I was a hedge fund manager. I know they're blamed for a lot. The last time I had Michael Ward on the show on August 21st, CSX was at 61.96. Now it's at 56.90. Of course, the market's been horrible. In the interim, the company raised guidance for 2008 from 340 to 360 to 365 to 375. Pricing was up 6%, fuel prices stabilized, and since there's a 60-day lag between the price of CSX's fuel and the fuel surcharge, this is one of those companies that's making money off being able to charge for higher oil prices, even as oil prices have actually come down. I didn't buy yesterday the big move in oil was phony. It's back down today. Now it's starting to be right, but higher oil prices are one thing that could hurt CSX ultimately and the real economy. CSX stock is down, even though it raised its estimates. Operating income growth rate to 15 to 20% a year from 13 to 15%. That's a gigantic increase. It raised its earnings per share growth rate from 18 to 21 to 20 to 25. This is a big company growing at 25%. We don't get that. And lowered the percentage of revenues taken up by operating expenses from the low 70% range to the high 60% range. CSX simply does not look like a company that's in trouble. But people always worry that it's going to get hit by economic woes. And by the way, the company did take a charge tonight, if you hit it up, for hurricane damage, but it did leave its earnings guidance unchanged. Union Pacific, by the way, last night also raised its guidance in a similar fashion to what CSX had done before. I want to bring Michael Ward back on the show to explain how the company's doing and tell us what he thinks of the real economy. Michael, welcome back to Mad Money.
Well, thank you, Jim. It's great to be back with you.
Okay, we get anecdotal signs. I look at the Baltic Freight Index down really horribly last night. I keep waiting for China to come back in the market. We see autos down. We see coal prices down. I keep thinking that the slowdown that started in Wall Street is going to slam into Main Street. Tell me through your book of business whether that's happening.
Well, Jim, we're really not seeing that happening yet. The coal continues to remain strong. So does the fertilizer, the ethanol, metals is hanging in there very well. We have seen some downturn in chemicals, but that's more related to the hurricanes, where about 60% of the production in Louisiana and Texas were shut down for Ike and haven't quite come back because electricity is not fully restored there. To take some of those plants some time to ramp up.
I know I saw Air Products, APD, actually pre-announced today a bad number, but that had a lot to do with Europe. How about the dollar not being so weak? Has that a stronger dollar, has that impacted you at all?
Not really, Jim. As you know, the coal prices have really spiked on a worldwide basis because of the shortage of supply. So a modest move in the dollar really doesn't impact that export coal market, which we continue to see very strong through 2010.
Can you give me, you got repriced contracts. Have any of the repricing your contracts been weak?
No, Jim. We, as you know, our guidance is to be plus 6% on our pricing on the same store sales over year-over-year basis, and we continue to believe that's what we will achieve this year.
Could this be actual growth, or could it be just share takeaway from the trucks, and we're not seeing real growth?
I'd say it's real growth in the rail market share. We are cooperating closely with our trucking partners to put more on intermodal movements because of the high price of fuel, and we work very closely with the trucking companies. And our domestic shipments of intermodal is up because of those congestion and the high fuel prices, Jim.
How much of what you ship is used here versus overseas?
I'd say roughly 85% to 90% is really domestically based.
But no, auto sales are terrible. Grain prices have come down a great deal. I'm not playing devil's advocate. I'm just saying, I mean, I watch these stocks. These stocks are teetering. I'm trying to understand how it is that the stocks go down every day, which usually are pretty good forecasters, but business hasn't slowed.
Well, Jim, you mentioned autos. I talked about some of the positive markets. We really have a diverse portfolio, and some portions aren't doing that well. The automotive market continues to be down 22 to 23% on a year-over-year basis. The markets that are housing related are down in the mid-teens.
Lumber's bad, right?
Lumber, paper, rocks, gravel, those sort of things are all down in the mid-teens because of the weakness in the housing market. So automotive and housing are particularly challenged, as they have been throughout the year.
You're a railroad. How can you keep cutting expenses every year? I mean, to me, at a certain point, you can't cut them anymore.
Oh, Jim, you know that's not true. You constantly have to work on productivity. In our public guidance, we say we're going to get $400 million worth of savings over the 08, 09, and 10. So we have lots of productivity programs to just become more efficient, deploy technology, and improve process.
Hedge funds all over the world are collapsing. I'm not actually crying about that. I think guys who make, like my friend Vladimir Lenin said, if the rich are unhappy, it's their own fault. But how's your new hedge fund buddies? Because they have some rail experience. You said in August they're okay. Are they contributing?
Jim, we've invited all of them on the board. We're now doing orientations for them, leading them through some of the studies we've done, where we're taking the company. Our first board meeting is not really till late in October, but we're welcoming them and listening to their ideas and see if there's ways we can get even better and continue to produce the kind of great results we've been doing for our shareholders over the last 5 years.
May I make a suggestion? You have to watch how well they're doing, because if they have withdrawals like other hedge funds I follow, they will be empty suit, empty seats on you. So just keep track of their performance, okay? I've seen horrible performance from many of my hedge fund friends, and they may have seats on the board, but they don't have any seats in their pants.
Well, Jim, you know, that's really for them to judge. They say they're long-term investors, so we expect they'll be with us for a long time.
My secret is that they have maybe long-term investors, but their investors themselves aren't. Michael Ward, thank you so much to see you.
Thank
Great
you,
to see
Jim.
You.
Glad to be with you.
CSX, look. He's making the money. He's doing the job. UNP, too. Rail's still a place to be. Amazing, given the fact that everything else is so weak. After the break, more money.